following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Thanks to our hosts earlier on. Let's see if we can keep that good standard up here. Dow's down 87 at 21,523. S&P's down 7 at 2465. The Dow was way weaker than the S&P earlier on. Now they're kind of catching up. As soon as they get to some kind of a equilibrium, there's usually a bounce. We'll see if that's going to take place. There was a bounce attempt earlier on. I have unfulfilled upside targets, at least for the Dow and the S&P. So, and we're going to be watching the QQQ. So let's get on with this technical interpretation. We're looking at, I'll run them at the same time. So here we go. The Dow right now, it's made, I could call it something else, but really it looks like a peak C. It's acting like a peak C. The MACD's good, turned down, but still good. Stochastics at 83%. That's good. On balance volumes pulling back. I suspect that there will still be an attempt early next week to make a new all-time high. Then we've got to be very careful. The weekly chart is in leg. Let me just move this over right now. It's in leg C, and I'm suspecting that all week we've not made a new high. If we do make that new high, what's going to be really important here is that by next week, we can get that leg D, and it'll also be a Chapman Wave 5. So I'm still expecting some further upside action. This is the 120-minute chart. I want you to just show it on the E-mini, and we can get there if I can. Type it in, ESU 17. There we go. Peak D at round number 2473. When I showed my subscribers this morning, and also posted in the den, that there was a round number high at a peak D. It said that that rectangle formation should be the pattern we're looking at sideways. But we have taken out the low of 2465, was it? Yeah, 2465.50. 2465.50 made it noon on the 20th. And that essentially gave the outer parameters, the borders, the upside resistance, downside support. We've gone below it, but we are really close to trying to get back into that rectangle. I suspect that there are a couple of things going on to make the most important action in the Dow earlier on. Look, you've got GE. I mean, let's face it, GE is just it's down 85 cents. It's at 25.84. It was down to 25.26. This is just not a good scenario at all. It's going to try to form some kind of a base, but really, GE is just in the wrong area at the wrong time. It just consistently does that. It was a financial stock as we went into the 2008 major top with the financials. It then goes into the oil service. What has the oil service done? Nothing. And now it's, I mean, that's not its major thing. It's in healthcare. It's in everything. But they really made a big effort to go into basically into that energy sector. I don't think that was a good idea. Anyway, well, who am I to say? Immelt is about to leave, and you'll have a new guy come in, and let's see what he does. So that's G. Visa came out, part of the Dow financials within the Dow 30, and with really good earnings. It hit a high today of 100.49. It's trading at 99.77. Now, this is the thing that says to me, watch out next week. I still see enough signs to say that there'll be at least an attempt to try to get to new highs. But this is the area where you've got to start now, being somewhat cautious. And you've got Visa trading up $1.68 with great everything. The MACD is very good. The stochastics at 92%, very strong. The weekly chart is in a leg E, makes the arch formation that goes to an M formation. This is the right shoulder of that M. It's the same thing in the stochastic at 79%, not at over 80%. 79% is good, not great. Let me just move these 120-minute chart configurations out the way. And we've got a very strong leg D, all-time high in the monthly chart. So it says that there's a rotational aspect to this that is really still quite positive. Now, when P in the Den says, remember, when the market decides to sell, technicals will not matter when. Yeah, there's no question. I cannot disagree, but I'm still looking at internal strength based on the technicals, which says we're not quite ready. And yeah, let me explain why. Look, if you go to the S&P, S&P had made a peak C. I could count this as an alternate count F, but everything about it, the stochastic still at 95%. The MACD good has only pulled back a little bit, 5 points, 6 points from the spectacular move that from the 2405 area all the way to the 24, what was it, 78, 77 yesterday. I think it's still going to make a D. Talking about D, it's in the leg D in the weekly chart, and this is going to be very important. Let me just do this for 1 second. Yeah. Within the context of the patterns that I look for based on the Chapman wave methodology, when you get to that fourth highest peak, for those of you who are new to my particular methodology, try to identify the most lowest obvious low bar and merely count each successively higher peak, label them alphabetically in sequence all the way to G. But the fourth highest peak, peak A, B, C, D, that fourth highest peak, peak D is where other things can happen. That's your objective, to get to a D. Well, here's your D in the monthly. You made a D in the weekly. You made a D on the week of the 3rd of March. That was that March 1st high at 2,400. Come down to 80 points to 2322. Now you're back at 2467 in a leg D. The MACD, the moving average convergence divergence, hasn't crossed positive. The stochastic is good at 84%. So, Will, I think there's still enough room on the upside to at least squeak to a new high. Then we've got to be careful. But wait a minute. The QQQ series is at a spectacular move, going to a new all-time high in a V, or a very deep, sharp cup formation from 143.90 back on the 9th of June down to 135.80 early July, and then boom, all the way back again in the shortest period of time. Hasn't made a peak. Today will be the first peak. It will be a peak. There's no way we're going to go above 144.44, even though it's options expiration. From now, it would be just too difficult to do. So I've called this gray A. I should call it a blue A, meaning that this is an all-time high. Why is this not the start of a brand new move to the upside? Why? Because I have a technique that's called the single leg A up syndrome. It could even be a B sometimes if A is just a fractional one-day move or one bar move and it keeps going higher. It has all the characteristics except for one thing. The MACD is holding beautifully at 96%. If by Tuesday or Wednesday of next week the MACD is turned down, the stochastic is under 87, let's say, with the QQQ NDX 100 Power Shares Trust Series below the 142.30 level of the 9-period moving average, that would say, hey, watch out. This could be one single leg A up, and it comes down sharply, actually. And if it takes out, goes under 150 in the next week and a half or 2 weeks, not making new highs. That's A up syndrome failure pattern. I'll be back. Basil Chapman. Target conditions are Dow's down 79, 70. S&P.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White services. For all the details and to sign up today, visit the front page of TFNN.com.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So down 73. I'm looking at the QQQs down 45 cents at 143.70. Just the mildest gone into the gap from 3 days ago. At this particular point, it's just suggesting that buyers are still coming in. The weekly chart technicals, although it's an all-time high, are really very poor. The stochastic's down at 69%. The MACD has turned down from that consolidation that started a month ago, or just over a month ago. So this is saying to me that there's a spectacular move to the upside if the MACD is going to cross positive in the weekly and the stochastic's going to go back to over 80%. But I have to go one step at a time, and the monthly is still very strong in leg C. This pattern that we're looking at with the left side, right side price time match, this deep cup with a spectacular single leg A that goes from 135.80 to yesterday's high of 144.44. It's going to be very important. What happens over the next 3 sessions? Why? Because there's the potential for a Chapman wave squash, and that's between the stochastic and the MACD to happen. If that really unfolds, we will get a peak A, a leg B, peak B, and then a leg C, and then the stochastic starts to pull back quite sharply, and it's left. So the stochastic is the torque, the MACD is the momentum, and that momentum keeps going until it gets to a D. That's the scenario. Now, what I'd say to subscribers is if the QQQ series makes a peak A today, and within a day or two, that's by maybe Monday or so, it goes to a strong leg B. I'm just going to have to call that a B. I can't give it any alternate counts at all. Not only that, the low that started from 137.87 back on that was in May the 18th, the decline went under 135.80. That's the only reason why I was a little nervous about jumping on board, even though the MACD turned around, the stochastic gave all the signals that I need to see, and now we need to follow it closely over the next 3 days. Let's make it clear. By Tuesday or Wednesday, if there's a push into the 145s, I have to consider that it's a buy signal to buy mode, and it's going higher. The Qs are going higher. If, in fact, there's a pullback and you start to see trading below 143, then we're looking at this as the potential for a single leg A. And I want you to take a little time because I have a number of people who follow the Chapman Wave very diligently. They've done many of my courses, followed it through my subscribers. Every day I discuss these things in my newsletter. what we're looking for, and therefore I needed to go through it in a pretty thorough way. Let's look at the SMHs, which I believe led the way up, led the way down, and now have sort of stalled on the way up at a peak B, gray peak B, because it's under the major high of the 9th at 89.72 SMH, down 82 cents at 87.14. This is going to be important because it also has the potential, not yet fully, but it has the potential for a Chapman wave squash at 97% in the stochastic. I'm watching this real closely. There are some people I know who are short the semiconductors, and I'm just going to say, you know what? At this particular point, you've got to be a little careful. Why? Because if there's a break to a leg C and it goes above 88.38, 88.42, you've got to consider that it's 2 is going to make a double top at least at the 89.72 level. If you're looking for a pullback to be led by the SMHs, by Tuesday afternoon, Wednesday morning of next week, you want to see 85.90 support taken out to the downside. Make it as simple as you can. Don't make it complicated. Basil QQQ potential island top next week. Let's go to the QQQ and look for that. I see what you mean. Yes. If there is an island top, in other words, if we gap down Sunday night's ugly action, and I'll show you the overseas markets in a minute, and there's a gap down Monday morning, whatever the low is today, there's a lower low at the opening on Monday, and it gaps into this candle of the 18th with a high of 143.17. That's going to suggest it's another little chink in the armor. But what will happen is that the stochastic at 96 will only go down to about 94, 93%. It's going to take a move down into the 141 area for the QQQs to really show significant selling. But what will really be interesting is that the weekly chart will be deflecting lower in the MACD, and the stochastic will remain well under 80%, probably in the 63, 65% area. That'll suggest, yep, limited upside at this particular point. Watch NVIDIA. P says in the den, yeah, NVIDIA's in leg C, made another all-time high. Boy, I have to call this a leg B in the weekly chart. No way. Yep, leg B. Let me just do this. I don't want to be glib about that. So that went to a lower low. Yeah, leg B, that's a good sign. The technicals are really good. I mean, this has just been a monster leader, just like Amazon has been a monster leader. NVIDIA core NVDA up 56 cents at 168.06. Graphic processing for workstation, games, mobile devices, etc. Man, this is a leg C in the daily. And there's that squash, goes quickly to an A, to a B, to a C. Then the stochastic should start to pull back. MACD's got the momentum to go a little higher. All right, so we'll watch that. We know exactly what to look for. Let's leave it at that. Now, this is the other thing. The IWM goes quickly. It goes peak A, peak B, peak C, peak D. Remember what happened at the last peak D, the fourth highest peak in the Chapman wave, 142.90 in June, comes down, but it makes a very nice double cup formation, like two U patterns with slightly lower lows and lower highs. Breaks out, goes quickly to an A, to a B, to a C. Leg D with a doji candle yesterday, peak D today, because there should be no new high today. That says, watch the MACD and stochastic, still very good. Watch the weekly, hasn't crossed positive, trying to cross positive today. Leg F, maybe it's an alternate count. So we've got a D in the daily, and probably an F in the weekly. Maybe it's an alternate count, but keep it as an F, and a D in the Russell 2000 ETF in the monthly. It's worth watching. Right now, it's just a nothing, not even a consolidation. It's just a little bit of a down day at 142.72 down 48 cents. But if it goes below 141.30 by Tuesday or Wednesday of next week without a new high, got to be careful. Now let's go through a couple of things here. TLT. My contention has been that if bonds rally sharply, that'll give the market an excuse to say, aha, money comes out of equities and goes into fixed income, and we'll watch it closely. I'd say anywhere in the 125.50s for the TLT. This is the Lehman, this is the iShares 20-year Treasury bond fund. The trading at 125.72, up 56 cents. Anywhere in the 125.50s is really what you want to see if you're looking at a weak market. Weak market today, but still very selective. So let's watch this closely. It says that bonds, the TNX, dollar TNX. Wow, I have a lot of questions to still get to. Let me see if I can do this. TNX made a peak B back. There's the 10-year T note, the Treasury note interest rate. This is the 22.41 is the actual yield. And what we're looking at is it made that peak H, and I drew in the H peak D at the top, and it goes to an H pattern. This is a pretty sharp V-shaped pattern. So let's see what happens here. I'll make it real clear. 22.26 is the 200-period exponential moving average. I'll be right back. Basil Chapman, Tiger Technicians Hour, Dow's at 78, S&P's down 576. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So the dollar is down 25 cents at 94. It's just 93.36 is going to be the 200-period exponential moving average support that it needs to hold. Let me just show this in a much bigger time frame. When you're looking at the dollar, you'll see that it constantly, and it's done this, let me just squeeze this chart. This is a weekly chart. You'll see that in any time frame, it's always making arch formations. It does make the cup formation. It does make a longer-term bowl formation. That's like a flat bowl instead of a cup stretched out. And what it failed to do when it made that peak G, doji high, in the weekly chart, instead of spiraling to the upside. Oh, I got a caller. I'm going to go to the caller straight away. John in Chicago. John, I'm so sorry. I forgot to look down and see where you are because I was busy with the charts. John, how are you doing?
Oh, that's all right. I was listening to you. How are you?
I'm well, thank you.
Great. I love your show, and it's such a pleasure to speak with you. I had a question about the XLK.
Yes, the XLK. This is the S&P Select Tech Spider Fund. What are you looking at?
Well, I was thinking of shorting this maybe by end of day. If it stays down here, it looks like yesterday, maybe a possible island top. I know the wick came down considerably, but and that's also a double top. It looks like going back to that
57.62. Right, 57.62 was the high on the 9th of June. Today's high is 57.60. It's missed it by 3. Oh, yesterday's high was missed by 3 cents. John, this is what I'm going to say. Have a little patience. I think that you're going to have every opportunity to get some shorting done. And I would, in this case, I would first say that the best acting of the trio of L's that we're looking at, which is the XLK, the QQQ, and the SMHs, the QQQ has gone because of Amazon, and then what was the other one? And then it spiraled higher, and it went to an all-time high. That makes it the leader, which is very interesting because it's a composite with having parts of the XLK and the SMH within it. But what's really important is that the XLK is second and the SMHs are third in the leadership right now since the low that was made early July. So I'm going to say to you, rather wait to see that the trend has turned to the downside, because if correct, you're going to have plenty of time to put the short side on, although your risk reward, because if you're looking for the downside, it means that you're going to miss the exact high because you have to wait for the bars to start being red and going down. But look how much better it is than looking at these incredible green bars. They've been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars since the July 6th low, of which one was a tiny little doji red candle, and yesterday, although it has a candle at the very top with an eye this looks a little bit like a hammer candle, it's still closed higher than it was the day before. So I'm going to say to you, have a little patience. I'm seeing internal buying, and I'm looking at the stochastic. If you just said to me, Basil, could you please put a piece of paper over the chart pattern and only look at the technicals? What do you see? I would have said to you, hey, John, great eye, because you're looking at a stock that's got a Chapman wave squash, and it should go to at least an A and a B and then a C, and then the stochastic starts pulling back. The MACD should continue higher, and then it should go to a D, and then you got to be very careful because you got a very sharp decline. But when I'm looking at the price, it's within 3 cents of an all-time high, a potential double top, and yet the technicals are not failing. I love when look at the way it went to peak D at 57.62 on the 9th. I'm going to highlight this. In fact, I'm going to open it up. We'll have a little lesson right now. I'm going to open this up. I'm going to put in a vertical line, and I'm going to make that vertical line thicker, and then put in a color, and then here we go. So make that pink. No, that should be green because that was an all-time high. So make that green. Make it weight. I'm going to make it nice and fat. And now I'm going to also put in transparency so that it doesn't cover up all the technicals. There it is. So here, look at this. This is very different. When you go to the high that was made on the 9th of June, compare it to the high that was made on the 16th of May. The MACD was strong, stochastic was strong. When it went back to a higher high, taking all that time, half of May into early June, the stochastic had pulled back. The MACD was lower than it was before. That was a negative divergence. So I'm just saying to you, I want to be as faithful to my technicals as possible. I want to keep in mind that double tops can fail. I want to keep in mind that the pattern is a little complex, but it's still more like a cup formation. And then I want to say, oh, but wait a minute. The technicals this time are strong. They're confirming the rally. So, John, how about you and I? We're watching this closely because I too am looking at these. I'm looking to short, but I'm also saying, you know what? Even today we had a buy. It didn't work out, but I think it was really the right stance was to buy the dip because I'm expecting a leg D in the Dow, and I'm still expecting a leg D in the S&P. So that, I think, is the way to think of it. Give it a little, have a little patience. Let's look at it together next week. Maybe Wednesday you can call and we'll do the same thing again.
Sounds good. Quick question. Now, when you say double tops have a tendency to fail or fail a certain amount of the time, what are your thoughts on that?
Let me just qualify that. If the technicals are poor on the retracement, in other words, when it goes back, all of a sudden the MACD is way lower. It is actually lower, but the distance between the 9-period differential, the green line, fast-moving average, and the slow is actually very big. It means for this to really tank and give me a down arrow, I have to wait for the MACD to go underneath the red line, and it will take at least a slide from 57.38 to about 56.20, 55.30 for that to happen. And so far it's holding pretty well. And the stochastics at 97.
Give up a couple of dollars just for the confirmation.
Yeah, I think it's worth it, and we'll do this together. I'll be talking about it, and you'll get a good sense of what we'll be looking at on Monday.
I'll call you Wednesday.
Or Tuesday. Great. Looking forward to it. Thanks for calling today. Have a great weekend. John in Chicago looking at XLK. Let's continue with this theme. I want you to look at the IYT. So who was the questioner? Sarah wanted to know about that. Hey, Sarah, good. Another good joke there for the market last night that you sent. Okay, so here's John, this is exactly what I'm looking at. You see in the weekly chart of the IYT, let me just do this. I'm going to make this nice and big. What happened in the cup formation, I always look for the cup formation, 173.88 was the weekly high, the 3rd of March at 173.88, pulls back to just under 160, runs back last week and goes to 175.75, just a point and a half higher. Now we've got a red candle. You see the way the MACD has failed to confirm? However, I'm looking at the stochastic and it's at 93. If this was at 87, I'd say, uh-oh, we've got the transportation average is giving a signal to say you got to be very careful because as long as it's holding in the 93% area, you got to get a pullback towards the 166s to really get that stochastic to fail. So that's what I wanted to show you, what we look for in divergences. And then we had a question, statement by one of our astute Chapman waivers, and I'll talk about that as soon as we get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, everyone. We're back. So a couple of things are going on here. Dow's trying to come back. It's down -6. The S&P is now only down -3. I see buying here. That's why I'm saying don't just the short side. Right, just have patience. You'll get an opportunity. Let's go to Bob in Framingham, Massachusetts. Bob, how are you?
I am well, Basil. I've got a couple of Chapman Wave things, and I said, who better to talk about the Chapman Wave than Basil Chapman himself? Good.
Let's fire away. First question.
Well, this is probably the easier one is going to be one. I've been in soybeans. S is in Sam, O is in Ocean, Y is in Yankee, B is in Bravo, the ETF, or maybe it's
correct.
Yeah, it is an ETF for soybeans. And I'm wondering what the current Chapman wave count is. I had sent you an email on it. I had labeled on the daily chart on July 12th as a peak B.
Correct.
Then we had a day where it gapped down and kept slamming on down to the 200-day exponential moving average.
Exactly to the 200-day, correct.
Yeah. Now, the thing is, do I restart my Chapman wave count at this point?
Oh, man, that's a very good question. And I'll tell you why it's a very good question for 3 reasons. Number one, excuse me.
Well, certainly.
There's a gap, there's an island reversal. I don't take them when you're looking at commodities. You're always going to get island gaps. They don't trade like their regular stocks. They trade overseas. There are a whole bunch of things that go to it. So we're looking at the Tucrium soybean fund trading at 19.21, down 12 cents. It has a terrific move. Bob had called us. He was in the calls. Had a beautiful, just a beautiful trade from the low of 17.27. It goes to a peak A on the 27th. And then it goes straight, just barely. It was like an excuse for it. Didn't even stop for a cup of coffee. It just kept going. And it went straight up and made a little doji warning candle on the 10th at 1955, had a beautiful engulfing green candle on the 11th, and then had a doji new high on the 12th and goes to 1964. What I call a long-legged doji. And then I have a whole bunch of rules, but it met every criteria to say, whoa, be careful, because it gaps down. And what does it do? It goes straight to the 200-period exponential moving average support, and then it starts a brand new move. Now, what I normally do, as you would recall, Bob, having taken my courses, I would put a gray A and a gray B underneath that, because it's underneath that blue B that made that recent high. Why? I don't want to miss any of the peaks, because I want to get to a D as soon as possible without thinking, oh, B, then it's going to go to a C and a D. Meantime, the inside, what it's got now is an inside Chapman wave buy mode that would, in a 120-minute chart, fulfill all the criteria of going to a D. In fact, it's at a D right now. It's gone to a peak D. So that's another reason why intraday it's pulling back. But it's making higher highs and higher lows. This is filling all the criteria. Not only that, I said there were three things. One is, within the context of the Chapman wave, you've got your blue B, that is the B that says you're in a buy mode because it's the MACD and stochastic were very strong. Then it pulls back. Then what happens is the second ingredient is it holds support, goes above the 9-period moving average. Now it's walking the 9 EMA, but because it hasn't made a new high, I have to count every little peak. So that's the second criteria. Third is I think I don't know why I've lost the chart on this one because I remember doing it. Now I can put in a rectangle and say within this rectangle, there should be a Chapman wave buy mode that goes in a shorter time frame to at least a D. If that D holds well, then you should go within the context of the time frame you're looking at. That's the one we're in right now. There could be what I call, remember there's a technique that I call in my book, Studying the Chapman Wave Methodology. There's a thing I call the overlapping wave. It's chapter 16, starts around about slide 317. And that says that if there is a strong move in SOYB, this is the Tigrium Soybean Fund, and it spikes above, well, let's just say there's no new high today, but it spikes above 19.36 Monday without going under 19. That's the key support right now. Instead, it pops up. Then what we're looking at is the chance for a Chapman wave overlapping wave. And it says that if that gray leg C continues, surpasses the high of 19.64 made on the 12th, you've now got an overlapping C that should go not only to a C, but it should go to a D, and then it pulls back right into the breakout area of the 1950s. So that's the scenario. Two scenarios that I'm talking about. 9 goes under 19. It says, uh-oh, sideways, going to maybe make an H pattern with a retest of the 200-period moving average. But boy, if by Monday it's acting very well, or Tuesday afternoon, and it takes out the high of yesterday, then you're looking at a retest of the highs, and that high shouldn't just make a new high. It should make two new highs, a leg C that goes to a peak C, and then a D. Hope that helps you.
Well, it does. It turns out that I do actually own some soybean shares of the ETF, because on the June calls, just as things were expiring, the price just kissed the $18 strike price. So when I opened up my account on Saturday morning, I said, where did those, because I had 3 contracts, where did those 300 shares come from? So I've been hanging on to them and trading them, ever since. And then on the Julys, I've already closed all the Julys, and that was before the, actually, as it worked out, there was a 3Xer and a 2Xer that I was
nice.
But I still have these. I also have a question about do we have time, or have you got someone else stacked up?
I have a couple of questions. Yeah, I've got someone waiting. Just give me the question. If I can get to it by the end of the day, I won't be able to. Let's look at it on Monday. If you want to give me a call Monday, we'll look at the second one.
Will do. Thank you. And I recommend everyone go to one of your courses. 2 of them. What the heck?
Thank you, Bob. And have a great weekend. Congratulations.
Too, the book.
And the book. Thank you. Congratulations on a fabulous trade. Still in position. Very nice. Let's go to Dana in Clearwater. Dana, how are you?
Doing fine, Basil. Bob's quite a character, I can tell.
Yes, he is.
Yeah, I called, or I sent you an email last Friday about VIPshop, VIPS.
Oh, VIPS. Okay, yeah, we got this down. Yeah, VIPS, and I did a whole bunch of work on this. It's now it's made a peak B. So you're in it, right?
Well, I was on Friday. I wasn't in it. We talked about taking a half a position at 11:25.
Right.
But I waited till Monday, and I was able to get in at 11:06. And of course, it's had a nice pop up to what looks like a B leg. And so I wanted to see if this is a time to go in and maybe buy the other half of a position. And if this thing is going to continue to rise up at least to the 200-day.
You know, this fits into the category of what I've been wanting to do for the last 2 weeks, and I just haven't had a chance. I wanted to show some stocks that have had really strong moves up, and what do you do once they break out to the upside? It's always really a difficult position to take, but if you can define that in a different time frame, in other words, the larger the larger tide is moving in a particular direction, that gives you a lot more confidence to add to it. So now let me do this. VIPS is VIP Shop Holdings, Inc. And we've got a break coming up. It's going to give me a little time because I wanted to look close to the monthly chart. My fear was that the monthly chart wouldn't hold support and what would happen in that H pattern. But now it is holding support. I can talk about it a little differently. We'll be back with Dana and Clearwater, Basil Chapman, down 62.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So, folks, we're looking at VIPS. I forgot to look and see what it is. VIP Shop Holding Limited, whatever it is. This is the chart we're looking at. And one of the things that I looked at when I got the original email about it was to say there's a pattern that I'm looking at, and it hasn't changed the character yet. And that arch formation since middle of 2016, it just keeps that 200-period moving average, which is a 13.20, has been like a sideways fulcrum. So it trades above and below and above and below. So it keeps making the arch formation, which turns into a cup formation. And now I think we're in another one of those cup formations. The trouble is we're making lower lows and lower highs. And that's the reason why I think as a short-term trade, if you haven't got your full position, but you are close to a pretty good position. Is that correct, Dano?
It's about a half a position.
So what I'm going to say to you, look at the way it's acting today. It's up 6 cents at 12. It's acting really nicely. And I'm going to suggest it's in the process of making yet another arch formation. And 1320 is the 200-period moving average resistance that and magnet in a sense. But the magnet has to overcome the daily of 1274, the 200-period moving average in the daily. So I'm going to make the suggestion. Right. You've got a nice position. If you want, I would add a little here at 1201, but this position does have a different kind of a stop. I would make the stop below. Maybe it's too much. 1176. Wow, that's 30 cents. It's like a 3% risk. Well, if it's a small position, I would buy right here at 12. But I would have a stop, keep the stop in for at least 2 days of 1175. But if it goes to 1205, you can raise that proportionately, whatever it is. So make it a kind of a trading stop. I like the action. The stochastic's improving. The MACD is good. The price is good. It gapped up. It hasn't filled the gap. It's doing. I don't know what it's in, but it's in all the right areas at this particular point. For the last 2 weeks, I like it, and then we'll deal with it maybe later next week. We'll look at it again. If it manages to get to $12.74 by next week, I think that's going to be really. Actually, if it even gets to 12.46 to start laying seed to the upside, that'll be very good action.
Okay, good. I like that plan. I've already moved up my stops for the first half that I bought up to 11.49, so I've locked in some profit there. And
okay, I like that plan. So. I like that plan. The main thing is, how does the weekly help the monthly? And we're talking about a daily. So let's go one step at a time. Give it another 4 days or 5 days, and let's look at it again. Hey, nice move. Congratulations.
I appreciate your help on that one. Thank you.
Thank you. Always appreciate it, Dana and Clearwater. Yes, you have a great weekend as well. So let's just do this. Folks, I know I got a lot of emails. I'm going to try to put it as a composite so that on Monday when we get back, I'll start off and I'll just go through. They're all very good questions. They put into exactly what we're looking at. So let's do that. Let me just, for now, the remaining few minutes, just let me talk about my webinar coming up. I've got a webinar. I wonder if I can go to it right here. My webinar, oops, in the wrong place. No, this is good. I'll move it over. There it is. Go to the front page of TFNN, and you'll see. And one of the reasons why I'm actually I'm really looking forward to this is going to be a major challenge for many reasons. But the reason why I'm looking forward to this, and Dave White has a webinar next week. Mine's coming up a week after that. It's the opening call 2 series webinar, August the 2nd, August the 16th. It's for subscribers. I'm going to talk about the technicals. I'm going to talk about sector analysis. I'm going to talk about, is it possible? How on earth can we expect the market to rotate in some way to hold up going into 2018? Or are we in for a pretty serious decline? And since July month will finish, I'll have the candle for July when we start on August the 2nd. It's going to be quite exciting because we're already trying to position ourselves in places that are under the radar, in sectors and areas that could very well hold quite nicely if there is a pretty big serious pullback starting in the next few weeks. I'll be back on Monday. Have a great weekend. Check this out, and hope to see you there. Have a wonderful weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.